Alrighty, Doc here this morning. Oh, that's the first time I've tried to speak this morning. The poor voice has a little frog in it. All right, let's see what's going on here. Let's kill some of this volume. There we are. The Swiss. Just as I thought it was safe to get back into the water, I keep on thinking that the dollar will sell down. And remember, today is a holiday for the United States, so there's the volume that's what's going on today. Is going to be a lot sloppy because you've lost, I guess, over 50% of the trading, if not more, on today's action. So we don't have a lot of our products are not open today. And our stocks are not open today. There's a 3-day weekend here in the United States. It's Martin Luther King Jr. Day. It's the celebration of or honoring of the civil rights leader who was, focused pretty well on peaceful demonstrations and dealing with reality. And if he had not been assassinating, it's very hard to say, but things would have been a lot more peaceful today. It seems like always we get stuck with the wrong people getting involved in these things. But the Dr. Martin Luther King was a very sharp individual. Anyway, I remember when I was young, we voted. I was a member of the New York Stock Exchange vote to change to take that day off. And once they did that, it was started to open the doorway for basically making it a national holiday. And I remember that. It was the debate went on at the New York Stock Exchange, and to change things. It was in the 80s, 84, 85, something like that, 1985 maybe. Let's see, where are we at now? At this point in time, you can see there's the Swiss trading at 91.46. We do think that the dollar is going to be weaker. I don't understand how they can fight inflation without helping other countries have a stronger currency so that they can compensate on not have that inflation that we've seen what Turkey has, that type of situation. And it does seem that's the logic of it all at this point. As the weeks and the months move on, we'll see how accurate we are. We're just trying to figure out how does the Federal Reserve of the United States fight the inflation, in a modern way. In other words, the last time we had inflation, basically physical money was more important. There was, it was 5-day clearing. If I bought Deutschmarks, I had to wait 3 days to have them delivered to me. Now they are delivered almost instantaneously, and there are no Deutschmarks anymore. There's a euro. So the financial system is uniquely, I guess, it's a whole new era of financial markets, and inflation is too many physical, money, too much money chasing too many goods, less goods out there. And in this case here, we're in a more modern era. Money can be cleared in a matter of seconds. People Venmo and they move Bitcoin, and they move. They got Dogecoin, and you got Ethereum, and you've got. Back then there was Glass-Steagall. We had Glass-Steagall, which was a law that had been around since the early 1930s, where banks could not compete with brokerage firms, and they had to be separated. Now J.P. Morgan Chase is one giant brokerage bank. So this change in the United States about how they're going to deal with the inflation is going to be very interesting. I myself think that they're going to try to make the dollar more expensive in some ways, and open the doorway to other pairs trades to be stronger. Now this morning it's not acting that way, but if you can see right there on J4X, let's see, where's that mouse? It is right there. As you can see on J4X right there, you can see, the last couple days have been a pressure down. You can see it over here on Chicago Quant. You see the same thing. You know, it has been a pressure down right there. And just last, Friday and today, they're trying to bounce up a little bit. You can see there's a little challenge to the daily right there. What is that doing there? Okay. Why is that in there? I'm trying. The weekly. Why is the weekly got a green line there? I guess oh, I see what happened. It bounced in there last week, and we are back into the sell this week. That's what that is right there. There we go. And so we're in a weekly sell, and I have to get my fact check spreadsheet up onto this machine. I did fill it in over the weekend, got it filled in, and I got that other computer fixed and so forth, and we're up and running again. But I haven't decided how to set up the layout here. So that's my next thing. With today being a non-market day for me, what'll happen is I will, try to get this organized, and we'll have a fact check spreadsheet probably tomorrow up on the screen. I think I'm going to use this computer that we've moved over to. I want to keep using that on some level. So I haven't used this computer since Princeton, I think. As we take a sip of the coffee. All right. Let's see. Let's go from there. Let's move over to the euro and see what the euro's up to. Where's the euro this morning? Right there. There we go. You see the euro is trying to roll over a little bit. Just a little profit taking, I'd imagine. Like I said, I don't really expect the dollar to be that strong now for a while. To me, I think what's going to happen will be is the dollar will be sideways, be down. It wouldn't surprise me if we go go months in that direction. I'm not sure if the pairs trades are going to explode. I don't think we're going to see that. I think that they're just going to be steady and strong. And then, I think when we saw, I guess it's about 4 weeks ago, we saw the Exchequer raise rates when we thought the Federal Reserve was going to raise rates. That was a little, to me, was like a tip-off. I think that is the nature and the direction that we're seeing. So, waiting for the first one to happen here. When we expect it to happen, as soon as Mr. Powell is sworn in. Once he gets sworn in or passed, then I think within days he'll start raising rates here in the States. And I would imagine you'll start to see some rates movements around the planet at the same time. In other words, I think they're going to match them. And, it's a very biblical way that the Federal Reserve functions, in a very mysterious way. I think we're going to go back to a little hidden action where they do things and they don't exactly march around screaming and talking about it. That was one of the complaints I had seen, that maybe the Fed is a little too touchy-feely. It talks too much, tells us too much about what they're doing. And the Fed has really functioned many years away from that. Forever. It was a surprise. I know that a lot of you have never seen this type of action, but we've had times where the Federal Reserve actually raised rates on a Saturday. I mean, they did it over the weekend. They didn't announce anything. Next thing you know, you come in on, the announcement's made somewhere around 3 in the afternoon or 10 in the morning on a Saturday, and you come in on Monday and the markets are in a tizzy. Remember back then we barely even had night trading. Night trading was an anomaly in its own right. I mean, now we have a 24-hour market. So there's going to be a lot of new characteristics of the Fed tightening that is going to evolve. I'm sure they're going to try, as usual, to make it less painful. I guess that's the best way to describe it. I think that is literally what they want to do, is to try to make it less confusing. That's the mantra of the Federal Reserve to begin with, is to make things stable. I think that's the real story over and over and over again, is to make things stable. Not make them surprising. Try not to freak everybody out. That type of thing. But I don't know how they're exactly going to do that. That's going to be very curious. Like I said, my wildest guess, best guess, is that the dollar is not going to be so strong, even with us raising rates. And that's probably, how we always look at like the metals complex and we're confused. How can we have inflation and we don't have we don't have the rise of the current of the metal and the silver and the gold and so forth. How can they be not at all-time highs? Why aren't they trading at $3,000 or $4,000 or $5,000 an ounce? That type of thing. Well, I think that they're going to be shooting for enormous amounts of stability. I really do. I really have a hard time imagining that they don't, and I think that that's going to be literally the whole strategy of it all in the end. So there'll be times probably where we'll see interest rates go up in the United States and the pairs trades will be firm. I'm just guessing that will be a tip-off. That's what we'll start to see, that type of action, which is kind of unique in its own right, So, all right. From there, let's see, where do we go from there? Let's see. Let's go to the cable. See what the cable looks like. Oh, and at the same time, you can see on, let's look at it on Chicago. Right, where's it at? Right there. The weekly is holding up very firm. They're not giving it up any. Matter of fact, it's even starting to curve up even stronger. So this little daily thing here could be, just a digestion of the little strength that we have had. I mean, we got up to the 15 area, which was impressive. We came from the 8. I think that's where we came from. Let's give this a respin. There's the 12. I guess we came from the 11 area. I guess that's what it was. We got down to 111.86, and we were thinking that it was going to touch this point. What was that? That's a 0.23, I think it is. It was going to be at 111.48. So it's come from that all the way up to 15 over, I guess you could say 6 weeks, which is a pretty good move for the product. Now that's the top end of the range. They're going to grudgingly, I would think, move slowly in that direction. And in the end result, the dollar and the euro will be in some type of just steady couple-year trading range and just going to go to the high end of it. And there's the cable. Cable's done the same thing. It's gone up to that 50 percentile of its range after just banging along here for a few weeks on the bottom end of the range. Let's put it up on here. Excuse me. A little sneeze there this morning. All right. See the cable doing the same thing. We got a little red on the J4X. You can see it's backing off a little bit. You can see, matter of fact, the lines are really moving aggressively down more. I'm impressed with that. I must have the speed a little too fast. We'll have to work on that. But you can see it's trying to break down here. And that's the daily. And over here on the cable, you can see our weekly is not changing any, but we are dropping hard and fast here too. Same situation. It's one big long line for just 2 days, just like it was there for taking off. Let's see what the weekly looks like for the cable. Right there. And it's breaking down too. It's gotten to the top end of its range. You can see the white line has pierced the dashed line. And a little surprised it's weakening that fast, but I guess it's so high up. But our weekly here is not moving yet. So we'll just watch this, see how they bounce in between. All right, from there, we go over to that magical laboratory, the chemistry set. We go and we take a look at the Turkish Lira. that is fascinating me to no end, to watch an industrialized nation like that go through the capitulations or papillations, where your heart pops back and forth. Papillations. Let's see what it looks like right there. There we go. It's fighting its way back into, I guess it went into a cell here. Oh, for that, just put that in. And it's trying to battle its way back in. We had the volatility signal there. We have the red and the green do their thing. Let's give that a spin. And let's see if we can set the scale right on that. Scaling. Screen is entire series. No, it doesn't do that. Screen. Movement size? No, that's better like that. Movement size. There we are. And you see there, it bound. We had the volatility signal kick up, and now it's trying to climb back into a buy. Now, look at that. The weekly has pierced today. That's interesting. We get into a weekly sell. I'm assuming they're going to go after this bottom. This could be. I know. Can you imagine? We've gone through, I don't know, 8-9 years of agony for the poor currency, and maybe they've come up with something. This might be a eureka moment. A government guaranteeing puts on their currency when it's in trouble. Instead of, imagine if Argentina had done that, instead and not declared bankruptcy all those times, and that type of thing, where some of these countries have declared bankruptcy because of the disaster their financial system is in, and instead just doing what Turkey's doing, and that is turning around and giving puts to buyers of their currency. When you think about it, it's not that bad an idea, because I guess, like I said, there's going to be an arbitrage to it. Sooner or later, they're going to figure something out. But the fact that a country is saying, okay, we'll give you a free put, a derivative, to protect your currency. So if you buy our currency at one, in this case here, say 13.43, and you buy it, and you start to lose money on it, and the country that does that gives you a compensation for the difference between the gain and the loss. Wow, that's kind of an interesting way of propping up your currency, stabilizing it. I mean, that is a guarantee. Remember, people bought currency pairs so that they could purchase items from those countries. And when it was a very healthy country with low inflation, low interest rates, so forth and so on, or fair interest rates compared to the rest of the globe, people would stay invested, and that money or those assets would sit in that country. And now we're seeing something here where a country who is an industrialized nation has now guaranteed investors that if they buy the currency, they will protect them so that they don't lose money, which is something everybody tries to hedge. That's what hedging is all about, trying to protect the asset. So that's very interesting. We're going to see, Turkey is leading us in many different directions of watching what not to do and what to do as an industrialized nation. So it's turning into a very interesting experiment we're watching. President/former Prime Minister Aragon has turned that place into a laboratory of experiment of capitalism in a good or bad way, but it's an experiment to watch. All right, now what we like to do is jump over to that's the weekly too. And the weekly is, look at that, the weekly is trying to turn up. Interesting, where ours is rolling over. We're going to have to work on this and get this adjusted right. We'll get that all set up. I think I must have some other nuances in it, but we'll get that figured out. Let's go over to the daily and look at it that way, right there. And you can see that the daily's matching up nicely and trying to move up. And it went into the sell up in here, just like ours did up in here, right there. All right, let's jump over to the Euro Turkish Lira. We like to always say location, location, location. There must be much more trade going on between them than the United States. And you can see there, it's also trying to get back into the buy after going into a sell right there. Let's get the line in there. And also got a volatility signal right there, the two dots. Let's change that to the, is it the movement? Movement sign? There it is, like that. There we go. And its weekly is also rolling over. Interesting. This will be interesting to see how this plays out. The like I said, this is, I remember saying to Dianos back here when they did it, back in the middle of December, I said, I don't know if it'll last, but I am impressed the way it stabilized it. And, sometimes traders, investors and traders and funds sometimes look beyond what they should be looking for, And in this case here, to a great extent, this makes a lot of sense. It really does. Stabilizing your currency through taxation and compensating the investor is a much cheaper process than trying to prop up your currency day in and day out, and going in and stimulating and going into the open market and borrowing capital that would get swallowed up in the end. You see, it didn't work for Turkey. They tried propping it up many different ways, going through their sovereign fund, just burning capital left and right, billions and billions and billions. And instead, you just say, okay, if you're holding on to our currency for the next 2 weeks, we're going to compensate you if you don't make money. How stable is that? In many ways, it's very impressive, I think. Now, I've been trying to figure out what's the as we would say, what's the rub? What can go wrong? People are buying your currency, then purchasing, whatever it is, oranges or cars or trucks or engines or some type of parts or cloth, whatever Turkey is exporting. And all of a sudden you do that as a country, as an individual in a foreign country, and you're compensated for the loss of your currency. It makes it kind of stable in many ways. It makes you want to do trade with Turkey. When you really think about it out loud, it says, hey, it's safe. You can do transactions with Turkey, and you'll be compensated not to lose the currency differential. It's definitely something to think about. It makes it a much more capitalist way of propping up your currency. Now, at the same time, they increase taxes on the population to compensate for that. But if you're increasing business and new buyers are coming into your country and pushing industry up, making more jobs and so forth, well, that's kind of a positive thing at the same time. It's just an interesting concept. This is going to be very interesting. No, I don't think any other country is doing this. They used to do it through interest rate differentials. Sometimes that was very punishing to the domestic country itself. And people would do the carry trade and so forth. This is going to be very interesting. There is no real carry trade, I guess. In other words, you buy it, and you already know what you have to spend. You don't have to worry about fluctuation of currency. It's going to be a very interesting experiment. Who would have thought that President/former Prime Minister Erdogan would come up with this concept? And they did. They put this together in 2018, going into 19, but they didn't enact it at the time. I guess they thought why do that at six? It was 6 lira to the dollar, and now when you get to 18 to the dollar, they had to do something desperate in a smart way. I'm trying to think in very capitalist terms. There's a lot of positive to this. I'm sure there's a negative somewhere along the line. Uh, or we're going to be, or we're seeing one of the cutting edge strategies where a country compensates for currency. One or the other. This is going to be very interesting. I know I'm saying this over and over again, but I find it unique. And we are looking at the chart, and it has stabilized. And the product is, and if they find a way to bring this thing down to say the 12s or the 10s, that's going to be like, wow, they came up with a way without bankrupting their country. Because you have to imagine, it's a capitalist structure, really. Because you go to Turkey and you buy an item and you don't have currency risk. Wow, that's interesting. The government covers the currency risk. Now they're going to tax their population, but at the same time, the population is going to have increased economic prosperity because you now have more buyers this year in your country than you had last year. The economy is going to grow. So maybe it's a template for someday where China will try to do the same thing, and they'll have a floating currency. And then we can actually see what the real value of China is. I wouldn't be surprised in the end China turns out to be, more like the GDP of India. I really don't think China is really flying along that well, but we'll see. We don't know. No one knows when you have a fixed currency, so it makes it really hard. And here we have a compensated currency with Turkey, a market, what do they call it, market orientated a way of protecting their currency or hedging their currency. All right. From there, we jump over to the Canadian. Right there. And as you can see there, let's get it up on J4X. Right there. J4X is still moving down like it was doing here on Chicago. This topping here. We were looking at this and thinking this is some type of head and shoulders. That was like a shoulder there. There's a head. There's the other shoulder. We're thinking that over the last 2.5 months, it's developed some type of head and shoulder there. Let's just tighten it up a little bit. We'll see if that does its thing. It came down, bounced off the 50 percentiles. You can see right there. And we'll see what they're doing there. You can see it's trying to push into the daily. See, why did it sell right there? Put that line in there. How did these things disappear? Not there. There's that one right there. So it goes into the daily sell there. And Friday it almost made it into the buy, and today it's pushing in. Again, we are, we're looking at a very quiet day here because America is closed. Only Doc's involved in. I would do this no matter where I was, so forth and so on. I would gladly do my webinar. I like doing my webinar. Gives me a chance to think out loud and strategize, and it's a good way of looking through all these products, sharing my ideas and getting new ideas. The days of standing on a trading floor or on a desk and being able to react is gone. Everybody in the world now is a proactive trader. We're not reactive traders. Now, there are customer accounts, in other words, at banks and some brokerages, that people are reacting to their client, but those days are so small now. None of the major houses have much. They used to have thousands of brokers and traders compensating. Now they have hundreds. The days of reactive trading is very small. The exchange floors are pretty much dead. It's all electronic. So from like 95% of us, if not greater, 99% of us trading, we have to do it as a proactive style. In other words, we have to find the trade. We have to see what we want to do. We have to use quantitative analysis, or some type of fundamental analysis, or the hedge funds, or and the mutual funds and the retirement funds have to find ways to react more, and not just be handed good trades. The good days of good trades, minus the bond market. I was explaining to Robin in Chicago about that. The I was telling him how out of all the areas of trading around the world, the bond market is the Wild West still. Still a very profitable environment. Those guys probably have not disappeared whatsoever. They're just hiding like they always have been in the darkness. But when it comes to everybody else, stock traders and futures traders and currency traders, we have been, they have been removed to a great extent. They don't exist anymore. But the bond traders, I'm sure that they've probably grown. People probably have jumped to the bond market, and it's really hard to too, because it's a very closed community. People don't even know about it and how it works. And it's an over-the-counter market and so forth. And so that's the only place that they have opportunity to react. That's the only place really to react nowadays. The rest of them are, I would say 90% of all the reaction jobs are gone, and traders are gone. They've just removed it out of our universe. So, all right, here is Canadian. You can see the Canadian's trying to do its little bounce, and just keep on. And you can see the weekly there. See how it's still moving down, even with the little bounce that's going on. And you can see here the daily is matching the Chicago Quant here on the J4X, the Manhattan strategy, or the Manhattan index. Indicator. This is the Manhattan indicators, we like to call it now. This was one of those conversations we had with ourselves in our community here one day, about a week and a half ago, explaining how we put together this particular concept, and we gave it the name, the Manhattan indicator. And I guess we should, once it's put together, Giannis is having it put together through Dukascopy. Once we'll have we will label a webinar called the Manhattan Indicator and explain it again. And you can go back to last week. There's some points where we discussed it, but we didn't label it as the Manhattan Indicator. Or maybe we did. It might be up there. There might be one up there that says the Manhattan Indicator, now that I say it out loud. We'll have to check that out and tell people, oh, you can go look up the webinar that says the Manhattan Indicator. I think there might be. I do remember spelling that. From there, from the Canadian dollar, we usually go take a look at the metals complex. But I think they're trading the metals today in an over-the-counter market, and let's just take a look at it on Dukascopy at the same time. Let's see, where are you? So that's XAU. Let's do that. XAU. XAU dollar right there. And there's gold. Let's see if we have an over-the-counter market, or the futures are trading in the electronic market. I do see Bitcoin trading. Yep, I see gold trading too. Let's put it on there. And there's gold this morning. You can see it's almost unchanged. Look at the way that thing's dropping because of that nice little action we've had up in here. You can see the weekly went into a weekly buy last week after just 1 week in a sell. And it was like a couple weeks in a buy here. And you can see it's breaking down here, same situation on the J4X, a little red there. It's a quiet day. It's TGIM. Thank goodness it's Monday. And since I guess a lot of traders out there are taking off for the Martin Luther King 3-dayer, that's usually traders will disappear to warm places, from the Northeast. or they'll go somewhere warm to play golf and play in the sun, that type of thing. All right, another sip of my coffee. Just shows you I did not get up early this morning. I literally woke up and started my webinar. All right, so you can see here gold is doing that, and that makes sense. You know, gold going sideways. That's, you know, we have the Canadian doing the same thing, doing its sideways thing. Now let's check out oil this morning. See what the oil complex is doing. Right there, West Texas Light. Right there. Are they trading oil this morning? Yeah, oil's moving along too, looking like colt. You know, the pit is dead. You know, I mean, unless some calamity occurs, more than likely it'll just be a little quiet. I believe we are something like 60% of world trading in the United States. So that's what you know, when you lose over half of the traders, it gets quiet. And then obviously those who need something and have an opportunity to buy it, they will, or sell it, either one. All right, from there we go over to the South African Rand. Let's get that going. So that's ZAR. Let's go find ZAR. So that's USD. And I guess we'd go with the slash ZAR right there. Let's get up on J4X again. Right. Pop out right there. There we go. You can see this pressure on it, which is nice. You know, seeing the currency kind of drift down. You know, we've been confused altogether, thinking, you know, that you follow this, you'll learn about the metals complex. And in this case here, you know, it's drifting down, and we have seen. Let's just throw gold back up on the J4X real quick. And we have seen gold, you know, moving up, which is relatively the norm for the two. And you can see the weekly on Chicago Quant right there in the sell. I guess what it was right there to close it this week. So it went into the sell somewhere around in here and ran back up to it, and now it's dropped back down and made new lows. We're getting a little volatility signal, as you can see right there. But again, it's a thin day, you know, so we don't send our charts out today even, because I hate to whipsaw anybody and tell them stay away. We always think in trading on our Chicago Quant strategies is that there are three positions you can be in. You can be long, you can be short, or you can be hedged to be neutral, or just neutral. And so we always believe that those are the three positions. And so you know, when you have a very thin day of market trading, you don't really want to get in there unless you need to hedge yourself. So, you know, we basically try not to instigate people to think they should go out there and trade away. All right, from the ZAR, we go over to the ruble, see how it looks on the ruble. Right there. Now, ruble was starting to give us some hope that we would see a backing off, but then God knows what noise this was, you know. What Mr. Biden didn't do and do, and anything's possible. And I don't know, they keep on talking about invasion of this and invasion of that. It's like, come on, guys. Can't we just do capitalism? That's what the sad part about the world is that we just don't get enough capitalism. And everybody thinks that they're living in a capitalist world, when in fact, if you're not living in the United States, you're definitely not living in a capitalist world, that's for sure. Let's see, RUB, R-U-B. There we are. You're basically functioning in some type of quasi-socialist, capitalist, crony capitalist world, you know, and nothing more than that. It's definitely not capitalism, let's put it that way. It's so sad that people think it is. That's what we're fighting about right now in the United States. We fight for capitalism every day with our socialists. We have socialists too here. You know, Mr. Biden is a socialist. Mr. Obama was a socialist. Our CIA director, Brennan, was a registered communist. People just don't know that stuff. It's funny as all get out. Matter of fact, they just tried to put a vice chair in. It refuses to say that they believe in capitalism. I'm not sure she's going to get through the process. We'll see. We've seen somebody else. The bank examiner graduated in something like Moscow University and wants to nationalize the banking system. They bounced her out, thank goodness. You know, so you know, you hear Doc say this stuff and you think, oh my God, Doc, you're on a ramble. You're not making any sense. These people are communists and socialists, and they're in our government. And the only difference is that our Constitution really stops them from taking property. It's bad enough that we have taxation, but you know, to take property and remove industry is against the laws of our country. So they try to work around the edges all the time to do it through policies, enact new laws that slow businesses down and things like that. But we get in there. You have people like Mr. Reagan or Mr. Bush and Mr. Trump. They get in there and they fight that. And Mr. Trump just recently did 4 years of presidency, and our economy was exploding into capitalism. I mean, the stock market doubled from the Obama era. And I can guarantee you, we're not going to see a doubling in the Biden area. We'll see, like, same thing with Mr. Obama. Mr. Obama got elected. The stock market was at like 13,000, fell down to 6,000. When he got out of office, it was at 15,000. It picked up, I don't know, 2,000 or 3,000 points. That's about it on the Dow Jones Industrial Average. Whereas when Mr. Trump got elected, the stock market was around 13,000, and now it's trading in the 30 some odd thousand, 33,000, 34,000, something like that. It almost tripled. You know, the media really can hide those numbers well. Oh my God, it was down at 6,000, 7,000, and Mr. Obama doubled the market. It's like, no, at first he got elected and it was trading at 12,000, and next thing you know, it's trading at 6,000. He didn't double the market. It fell down and went boom. And so that's what we're saying here, is that we have our socialists too, and we try to push them out the door when we can. All right, there's the ruble, and we have always a lot of hope for the ruble. We always think that the ruble should be a better currency, but obviously when you have external forces influencing the Russian Federation for their safety and so forth, you know, they live a very nervous life. I guess it's like the Cossack years, worrying when the Russians used to have to worry about the Cossacks riding in and destroying things, and that type of thing. That's what, a couple hundred years ago. I guess that's ingrained in their minds. Something, I don't know. Over on the ruble, we go over to the yen, and you can see there the yen went into the sell there, and it's trying to bounce up. We're still in a weekly buy from back in here, so all it's done is gone up and then come down, challenged it, and looks like it's trying to turn back up again. And that could be part of that canary in the coal mine situation, where we're watching. Let's put that in there. We're watching the way that we're looking at 5-year highs. I think it is now. I think that's what it is. 5-year highs at the yen, or 6-year highs. And their stock market is 2/3 back. You're looking at a stock market in Japan that has been down for 3 decades. 3 decades, over 30 years. You know, it was trading in the 39,000 area. It fell down to the 6,000 area, and now it's trading in the 28,000 area, 29,000 area. So at least it's 2/3 of the way back. You know, it's really trying. You know, for decades it's been in the hole. Reminds me of the internet bubble back in 99, 2000, where we saw the internet stocks, you know, fall from 5,000 all the way down to like 2,200 or something like that. Lost 2/3 of value. It took a while for it to get back to the 5,000, and now it's trading at 15,000. So, and that is the. We'll show you that once we get done the last of these currencies. We can go right into the indices and show you how again, people don't. Unfortunately, the news media really hides a lot of this stuff. They don't really show it. That's why I love doing my webinar every day. I get a chance to talk about things that are real. We can put the charts up on the screen, and you go, "Oh, how about that? Doc's right. How come the media doesn't talk about that?" It's like they have a whole different narrative. They're not worried about you making money or learning history. They have the interest of removing history. Exactly there. And so you can see the same type of action on the daily. See that movement down. Do we have that right? Yeah, there we are. It's doing the same thing there. Movement down. From that nice long run that it had. Yeah, that was one heck of a move. They took it up, knocked it down. Look at that move it's been doing. That end's been moving up from the 109 area. It's gotten up to the 116. That's a 5-year high right there, 5 or 6 year high. Not since 2017, I think it is. So something is brewing, with the dollar and the pairs trades. And that's probably like the canary in the coal mine. All right, now let's jump over to the last one, and that's the Mexican peso, our other neighbor. We watched the Canadian and we watched the Mexican peso. Let's see, Mexican peso. Right there. What an interesting move that was. Mr. Biden had a meeting with, right around here, he had this meeting. It was in this channel for a long while. And Mr. Biden had a meeting with the Prime Minister of Canada and the President of Mexico. And the next thing you know, the poor peso went flying. I don't know what Mr. Biden told them, but obviously it wasn't a good thing. Definitely wasn't a good thing. Their currency went flying up against the dollar. But it seems to be coming back down again. I guess they're realizing that Mr. Biden is a paper tiger like China. He can do certain things, but in the end result, it won't last. Let's see. Let's get it up on the J4X here. Let's see. Go like that, and USD / MXN. And here it comes. You'll see a long line of red. Matter of fact, it picked it up very well on the J4X. Look at that. Same situation. The daily, did a fine job getting into sells up in here a little early, but it does keep you in the trend. I think we're gonna have to adjust this out, get this fixed a little bit more. It must be a scaling thing I didn't adjust yet. I'll go and check it out. I have that other computer running now, so I can do that. We'll do that today and get that all straightened out. All right, over to, where do we go from here? Let's go to, we could talk about the metals complex, which this is what we normally do. We take a look at gold and silver, and then we jump into the energy complex, and then from there we go over to the stock market complex. So what we can do is we'll do the metals, and then we'll try to finish it off with a little yen. So or not yen, but the Nikkei. We can show you the big difference in the Nikkei over the last decade and a half. I know we've seen a weekly chart. Let's do that now. I don't see anybody asking any questions, so why not? Let's just show you that. I want to show you how the Nikkei, let's see, I have to find it. Let's see, Nikkei. Stock indices. We're just loading this thing up now with all those things. There's yen. So it's like Nikkei 20 something or another. There's Sony. Let's see. Find this. Maybe what we'll do is we'll do that tomorrow, because all we're going to be doing is scrolling for a while. What we can do is we can show it to you on Chicago a little bit. I don't think it doesn't go far back on our Chicago as it does on J4X, so that's what's so enjoyable about J4X. Let's see, up there. Okay, right there. If anybody knows what the symbol is for it on J4X, we'll see if we can hunt it down. Let's see, where's it at? Nikkei, right there. There's the Nikkei. And I don't think I go back more than like a year or so. So you can see it is showing, way down here in the low 20s back in the beginning of 20. But this is a futures contract, so there's a short life to these things. You can see it's marching along like the big triangles forming. You can see that there on the Chicago Quant. See that triangle? Like that's the 1, this is the 2, this is the 3, this is the 4, this is the 5. We've talked about triangle theory. W.D. Gann and R.N. Elliott came up with a triangle theory that they when they were partners with Jones, the very first hedge fund back in the 1940s. Let's see if I can find this. Go to search. Someone's moving their tractor. Okay. Let's see if I can find it on here. Let's see what is that. Maybe NK. Nikkei? Not that. Let's see, I would love to find it on here. NK. NKU/20 maybe? Nah. We'll find it. We have the other computer. We'll get it up and get it running and take a look at it. All right. Let's go to the metals complex, and we'll find that for you tomorrow. And let's take a look at silver this morning. We've seen gold is sideways to nowhere. You see silver is doing the same thing. And we can put that in. XAU, where is it? Was it US? I guess it's XA or X. I'm just going to find silver on here. Is it S? XAX? Let's try that. XAS? No, that's not it. Is that silver? No, that's not silver. No. All right. We'll have to escape that one, so we'll find that. We'll just take a look at it on this at the moment. And as you can see, I think, and I don't even know what copper is. I wonder if I spell these things out silver. There you go. Spelling it out, did it? There's the silver. I wonder if they go Nikkei. I have to find out what the symbol is for that. And there's silver. And you can see here, it is pushing into the sell again today. It's trying to do that. But the weekly looks holding up nice. You can see same situation over here on J4X. They're just flirting at the moment in this thin day, trying to get into the sell just like we are doing right there, because it's that thin. All right, let's go to the, let's see, natural gas. I'm not sure what nat gas is. Natural gas? No, that's the euro. Okay. All right. We'll get some of these others. Let's take a look at natural gas on Chicago Quant. Where are you? Right there. And right there. Are they even trading that gas today? Yeah, they are. So it is on the electronic market. You can see here, long ride down, slow and steady. Poor Europe is the opposite. Same time period, we've seen natural gas go up tenfold. Can you imagine that? Used to be, they would be almost like, an arbitrage between American natural gas and European natural gas. And now, European natural gas is trading at like 27 and we're trading at 4. So it's a big difference. All right. Hey, if they can control the climate, why can't they fix that thing, huh? It's because they can't control the climate. All right. From natural gas, we go over to copper. Oh, I bet I write copper in here. COPPR. Go like that. Yep, looks like their copper's in there. Good. There's copper. Just moving down a day. It went into a sell on Friday. But the weekly's holding up there. You can see the same thing here on J4X. Copper is holding up, but breaking down when it comes to the daily itself. Let's see, there's there. So it might have closed in the sell right there too, perfectly. And that's today. And we are down today too. They're trading in an electronic market. I had a dream that I talked a half hour longer. I just realized that. How funny is that? I had a dream that I was doing a webinar, doing Dukascopy, and I looked up and saw that I had talked a half hour into it. Or what, did I do that on Friday? Maybe it wasn't a dream. Maybe I'm in that nursing home, as I always say. Doc is not really. Doc is in a nursing home and he thinks that he's doing a webinar. In fact, it's all in his head. Oh. It's a holographic world. All right, what else we got? We got copper. We've looked at natural gas. Basically going through the whole energy complex here, and the metals complex, which is nice. So we have all those 3 now in there. And let's just take a look at platinum on the Chicago side of it. We can find that mouse. There it is. Right there, April platinum. Again, another one sitting dead. And that is Monday. Is that Monday? Yeah, that's Monday, 17th. Okay. So there's the action we've seen today. And what we will do, we can show you what the American currencies are doing. Not the currencies, the stock market. You see the NASDAQ, that's what they call what do they call it? I think we can get that on there. They call that the Tech 100. So Tech 100. Let's see if that does that. No, it doesn't do that. We'll find the symbol for that. And that's the Tech 100 on Dukascopy. And then yes, you can see it's up again today. They're showing some strength in it. See what the S&P 500 is up today from where it closed. And last night when I first woke up, before I went to bed, they were sending them down in the electronic market. Now the Dow Jones Industrial Average is up a little bit, just up a little bit. All right, traders, we will get this act even better together tomorrow. So this is Doc from North America. Tomorrow we will have the fact check spreadsheet back up on the system, and we'll have all the symbols going. So this is Doc from North America. Everybody have a safe and smart weekend. No, it's not weekend. It's Monday. That's right. We're still in. Doc is on a 3-day weekend. That's why it feels like this. So we will see you on Tuesday. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders.